is the option backtesting. It's one of the most premium products when it comes to the options trading, because it's very simple to backtest a equity strategy or a future strategy, because the you can say the conditions are not much. You have either you're buying a future or you're selling a future, but I can't do both things together. In options, you have beautifully, you can create your own structures. I can be a positive, very positive, mildly positive. This way you have your own structures. So you need to backtest your idea so that your conviction becomes stronger. You can put more money into it. That's where you will be able to leverage out. So in option backtesting, how it works, let's see that. So let's pick up one strategy. So there is a belief we sell the option at the start of the series and hold on till expiry, will make money. So let's go with the same condition I'm doing for the Nifty. You have the start and the end date. By default, we have kept 3 years, but you can go till inception. So when this contract came into the derivative market, you can go since that. So in Indian market, you had 2000 and 2001 where the options were there. So you can go back till then and do the complete analysis. So say I'm keeping it right now, only Nifty for the 3 years. I say I want to sell an option. When I'm doing a short straddle, we are selling the call and selling the put. Now, I need to tell the algorithm which strike I want to sell. How will algorithm come to know what is the logic for me? So how do we define the strikes? Now you have 2 options here, the strike and the delta. Coming up to the strike, when you say a strike, 0 means at the money, positive number. So when I say 1, it means the one strike above the at the money. When I say 2, it means 2 strikes above at the money. Similarly, when I want to say strike below, I will say -1, which means 1 strike below the at the money. When I say -2, it means 2 strikes below at the money. Clear? Very important. 0 at the money. 1 strike above. 2 strike above. Similarly, you can go for 4, 6, whatever you want. -1 strike below. -2 strike below. So in Nifty, what is the strike difference? 50. So 1 strike above is 50, 2 strike above is 100. So keep in mind, if you want to sell 100 difference, you have to be in even numbers. In Bank Nifty, 1 strike is 100, 2 strike is 200. Clear? So this is the strike-wise nomenclature. Now coming up to the delta. So one who are familiar with the delta concept, for them it is very important to understand. Now when I say delta of 50 means at the money. So when you know option, so instead of a decimal, we have kept it in a round 1. So 0.5, it is 50. Okay, so the range is 0 to 100. Now for the put also 0 to 100. You don't worry about the negative sign, that the algorithm has taken care of. So when you say at the money, it is 50. When you say out of the money, it is less than 50, 0 to 50, 0 to 49, I would say. Or when you say in the money, it would be 51 and above. Okay. So this way, you need to be specified what strikes you're doing. First, say for instance, now I'm making it simple. I'm doing by strike wise. I'm selling. So I click on the radio button, sell, call, drop down, I select strike. I put the strike as 0. I go to add. Now, second radio button, again, sell. Now I want to sell a put. So I click on put. By default, the strike will come up. So make sure either you can have your definition based on the strikes or based on delta. It cannot be a combination of both. So if whatever you select the first option, the same will come for the rest of it. Again 0, I am selling at the money put. So again 0, 0, 0. Now I'm saying for which expiry I want to do, weekly, monthly. So when I say weekly option, so all Thursday it will be taking up. When I say monthly option, it will be taking up the last week. So last Thursday of the month is the one. So those way you have it. I guess so now people are more interested in weekly. So let's do this monthly option first, and then we can see for the weekly also. So when I do monthly, now come to trade to expiry. So your trade initiation is there. You are saying to the algorithm when you are entering the strategy. So the notion is big money is when there is a big premium. So a big premium is at the start of the expiry. I'm going and selling at the start of the expiry. So say for instance, I say 20 days before the expiry, I do it. And I hold the expiry till, hold the position till the expiry date. So now what does it mean? Date to expiry, trade initiation 20 days before expiry, I initiating it. Trade exit 0, that means I'm holding the strategy till expiry date. You can select, say, if you say instead of 0, you say 5. It will mean that you are exiting the strategy 5 days before expiry. So you can do a backtesting intra expiry. It is not necessary to be expiry on expiry because it will not give us a realistic picture. I need to know my nature. I need to know how much time do I stay with a strategy and then backtest it. Okay. So now let's first do 0 only. So I am doing 20 days before and exiting on 0. Now we have kept something called as OI greater and volume greater. It means it will exclude or it will not take the trade when there is no open interest or where there is no option traded. It is very important. Why should we do an illiquid? In Nifty, Bank Nifty, this condition doesn't apply, but when you do the stock backtesting, this condition is very important. So yeah, in backtesting, you can do for indices, for the stocks, the listed stocks which are there in the derivative market, you can go and do it. So it's open. Now, if you can have your own condition, so we have kept it positive, you can have your own benchmark. I want OI to be minimum 10,000. I want volume to be minimum 10,000. So you can define your own parameters. Target profit, stop loss. That we will understand. So let's understand what we have done till now. I have selected Nifty as my instrument for backtesting. I am doing the backtesting for the last 3 years. The strategy which I am doing is selling the at the money straddle. So the legs are selling a call option, selling a put option. So CE means call, PE means put, buy, sell, you are defining it. I'm defining via strike. So strike 0 means at the money. So in both the case, it is 0. Now I have selected monthly expiry. I'm entering the strategy 20 days before expiry. And I'm exiting, I'm holding on till expiry. So 0 means expiry day. Backtest. That's it. So last 3 years data, it has scanned, evaluated, and given the output. Strike rate. So here comes first the statistics of your backtest. The strike rate is 49%. You are making loss in this strategy. So in short, it's a negative strategy. So the notion of big money, big premium makes big money is not true. Timing is most important when you come to options. There comes the edge. It's not basically the premium. It is basically what time you are doing buy or sell makes the whole lot of difference. So profit factor is 0.85. Profit factor is nothing but this total profit divided by total loss. Average win per PNL is 8970. Average loss PNL is 10,000. Max win is 23,561. Max loss is 32,003 rupees. You have total win and total PNL. So we saw that the max loss is 32,000. Okay, we have almost equal amount of win and loss count. Now I say, now I want to say that I don't want such a big loss. So I want to go and do the stop loss. So I say whenever the stop loss is say 8,000, exited. So I'm keeping stop loss as 8,000 and then I'm seeing the PNL. Now we saw the difference. I have optimized my strategy. So I have holded the strategy for 20 days. I saw what was my PNL. Now I have seen, does the stop loss will help it to improve it? So we kept a stop loss of 8,000. We saw the results have changed drastically. A loss strategy has come to a profit strategy, but the strike rate has dropped down. Okay. And similarly, my average win has not suffered so much. So overall, it was a good decision to put a stop loss. Now, this way you can keep on doing, you can find out which value works for you, how much is the realistic one. Now say I want to put a target profit also. You can have a target profit defined. Whenever I'm making say 10,000, I want to exit. And say whenever I'm losing 5,000, I want to exit. And it will run, and here is the result. So you can see that the way the backtesting is like, it is just on a click. You don't realize it like, wow, it's been done. So now option trading has become really simple because it's very important to get a conviction. We backtest our ideas. So here is the tool which helps you to backtest it. So my max win is 19,900. Why? This is because one particular day the entire jump came. So it did not exit at 10,000. So one day prior it would be 9,000. Next day it is 19,000. So you're getting 19,000. The data currently we have here is the end of the day data. So it is EOD data. So based on the EOD data, you can conduct the complete backtest and understand how is the strategy. You can go and do any leg, you can go and do n number of legs, be it 1 leg, 2 leg, 3 leg, 4 leg, anyways. Now let's see, we can do some interesting study. Now we saw how basically doing 20 days before and 0 days, the money was not made. Now let's see, we do the same thing now in Bank Nifty. Just a caveat, whatever we are discussing today is just for the example purpose. Don't take it as an analysis purpose. Don't go and trade on it. So it's just from the understanding purpose. You do your own research, understand the concept, and then the power is in your hand. Say Bank Nifty, now I'm doing multiple straddles. So instead of doing one straddle, I'm doing a multiple straddle. I'm doing one at the money straddle, one out of the money straddle, and one in the money straddle. So let's do, I'm selling put, strike, 0. Sorry, I need to select strike, 0, at, I'm selling call, strike, 0, at, I'm selling call, strike, 1. So one strike above, okay. I'm selling put, 1. So mind you, whenever you're doing this, the strike is based on the at the money. It is not either this call or put. So plus sign means strikes above at the money. Minus signs means the strike below it. Clear? Again, add, call, strike, -1. Add, put, strike, -1. Okay, so let's see it again. 0, call and put sold. 1, call and put sold. -1, call and put sold. Done. I'm doing this on weekly basis. Now I'm doing this 6 days before expiry. So that means I'm doing this on Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday. So you have 6 days, and I'm exiting this strategy, say, on 0 day. That is on Thursday. OI stuff I'm keeping the same. I'm not keeping any target and the stop loss. So here you have the complete trade details. I will go and backtest it. So it is evaluating each and every weekly option and giving you the data. So you have a strike rate of 59%, PNL of almost 50,000, profit factor of 1.06. You have 81 times it is been profitable, 57 times it has been a loss making. You have max loss of 45. You can optimize it by putting the stop loss. Okay. One very important thing which I missed out. The first thing, the table view. So you can have a table view and the graph view. And the most important thing, you can export the complete details to your email. So when you click on this dots, or in a Android, you have the email icon. When you click here, it will export it to your registered email ID. So you will have the CSV files, which would be giving you the trade statistics, and it will give you the strategy, what you have put, and in the trade statistics. The risk parameters would be there. The statistics would be there. So now you can backtest and keep it for yourself. So when you go, you can see this. Now you can have a trade details. When you click on view trade details, you have something in Excel table view. So when you click on table view in Android, you will get the complete trade details. So minor 1-2 places, there is a difference in Android and iOS. Otherwise, 99% the complete look and feel is the same in iOS and Android. So here you get the complete table view. So you have the entry date, exit date. Prices are not there because as per the exchange, we are not allowed to resell the data. You have the MTM, what is there in the individual strikes. If you want to have, you can go back and see the Bhav copy for the prices. So you have the complete list of trades, how much PNL you made on each trade, and you can get it, close it. Now I saw for the 0 date. Now let's do, instead of 0 day, I say I square it off 2 days before expiry. So that means I took a trade on Friday and I'm closing it on 2 days prior, which is Tuesday. Okay. Backtest. The PNL has changed. The profit factor has changed. The strike rate has changed. So you see that every day has a meaning in it. So that's why options are so sensitive to time. And that's the beauty of this product. You can make a very good money if you are you're doing a proper strategy at a proper time. Entry is at a proper time, exit is at the proper time. Clear? So this is, so you have a short strategy which makes money, and you have a long strategy which could make money. So backtesting tools gives you an edge to backtest your idea since inception. You can change this time period to the, you can say whatever you have. So in case of weekly, we don't have before 2016 Bank Nifty, but if you have going and doing, say, I want to do it from 2000. One sec. Yeah. So now I can go and select any date. Say I want to do it from 2010. And I want to do this in monthly. And I want to do, I'm keeping the same 6 and 2 backtest. The scene is different. So over the periods, it is not worked. because the dynamics of Bank Nifty has changed once the weekly option has come into perspective. So the strategy which was there, which was making money, which is making money currently, may not be making money in the long-term picture because the complete dynamics of Nifty and Bank Nifty has changed. So this way, backtesting tool gives you an edge to backtest your idea based on the strike, based on the delta. You can be creative in your strategy. So there is sky is the limit. So here is the backtesting one.